Hi, I'm Jessica Amir for the Finance News Network. Joining me from Adslot is CEO Ian Lowe. Ian, welcome back.
Thanks for having me, Jessica.
So first up, for those that don't know, Adslot builds technology that facilitates the buying and selling of online advertising. Can you tell us more?
So we have two basic propositions that we take to market. One is a workflow automation technology, which we sell to media agencies or large media buyers. And we sell that under a license fee model. And then we also have a trading technology that we sell to both buyers and sellers of online advertising, and we monetize that through the publishers or the sellers under a trading fee model. So it's essentially a clip of the ticket. So we've got the two propositions and they operate under slightly different revenue models.
So the company recently released its FY17 results, which showed strong growth in trading technology revenue. Can you tell us more about what drove that?
So the revenue, trading technology revenues grew 27% in FY17, and that's the fourth consecutive year of growth in our trading technology revenue stream. And underpinning that was particularly strong growth in license fees, which grew 45% year on year. And in turn, that growth was driven by our large contract with GroupM, which we announced last year. And if we took a full year treatment of the growth extracted from that particular client, then the year-on-year growth in license fees would have been closer to 63%. So it was certainly a pleasing result, and our expectation is that we can maintain a similar level of growth.
And Ian, the company's recently received commitments from agencies about its automated guarantee technology. Can you tell us more about that?
First of all, the automated guarantee technology you refer to is the trading fees side of the business, the trading technology I described earlier. So we've had a couple of large agency clients that are already using our workflow technology, Symphony, make commitments, meaningful ongoing commitments to transitioning their trading activity to our automated guaranteed technology. And so this is, an important milestone for the business, and I think really strong validation of our product vision. And the expectation is that this will start to drive some more meaningful growth in trading fees as we move forward. And so further to that, the commitments that we're talking about, one of those agencies is based in Europe and the other is based here in Australia. And both of these agencies are really committed to an ongoing process of transitioning their current activity from current state to new state, being the trading technology I'm referring to. And we expect that that's going to be a really successful program and allow us to develop the blueprint that we can then take into other Symphony agency customers to achieve a similar outcome.
So Ian, you mentioned earlier you've got an agreement with GroupM. Can you just tell people at home who GroupM actually are and how that agreement is progressing?
Certainly. So in a nutshell, GroupM are the world's largest buyer of advertising. So it's a multinational group that's part of the WPP group, and they're represented in almost every country on the planet and have a number of media agencies that plan and buy media on behalf of large advertisers. In terms of our progress rolling Symphony out for GroupM, since we announced that contract in August of last year, we've successfully deployed in 3 new markets for them, being Austria, Taiwan and Turkey. And there's an ongoing program of deployments planned across APAC and Europe, and we're in really good shape as it relates to the execution of those deployments for GroupM. So it's a part of the business that we're particularly happy about. Further to the deployments that we've already done, there's another 3 markets that are in various stages of activation, and there's a pipeline of additional markets that are being discussed with GroupM beyond that.
So last year you raised $18 million for further investment into product development and sales. Can you tell us how that program's going?
The primary objective of the capital raising was really to improve the velocity of our product development. And so essentially we set about a program of expanding the product and development team. The productivity that we're seeing come out of that additional investment is probably even beyond what we anticipated. So with a 2-fold increase in the investment in that team, we're seeing a 3- to 4-fold improvement in the output of the team. It means we're in a better position than we've ever been before. We also have invested more modestly in sales and marketing activity, principally bolstering our sales presence in the US, which is obviously a particularly large market, and supporting that activity, and also our sales efforts in all markets. It just means that we're in the best position in terms of the output on the product side and the sales and marketing effort to take advantage of the market opportunity, which is very significant.
Last question now, Ian. Can you tell us about the outlook for FY18?
So we anticipate continued revenue growth in trading technologies for FY18. That'll be contributed to by both licence fees, where we have good line of sight into forward revenues. They're predictable recurring revenues, and we have contracted growth in that revenue stream. But we also anticipate trading fees emerging to make a much more significant contribution to trading technology revenues over the coming quarters. We're very excited about that, and I think importantly that revenue growth, the substance of that will be realised in profit performance now that costs are very stable.
Well, Ian Lowe, thank you so much for the update.
Thanks for having me.